Alright, I'm back. Hopefully now it'll let me screenshot. So let's try it out. So essentially this trade is entering on a 15-minute CISD after we've already framed this as a sell model. And we already knew that this was a 4-hour CRT as well. Oh, that's another thing we should add into it. The 4-hour CRT. But it's not going to let me. Yeah, this is like a really nice 4-hour power of 3. So let's just draw out the candle ourselves. So the open of the 4-hour candle was right here. It might help to pull up the 4-hour stat map. Okay. So yeah, here's the 4-hour candle. So this was an amazing 4-hour power of 3 trade where you know that it's a CRT, right? Because you have candle 1, so let's just draw this out. So candle 1 was like this. Candle 2 was like this. Actually, I'm not going to draw that out like that. There's not really a good point. Okay, is it going to show up? Is my live stream going to show up again? Not yet. My live stream is not showing up yet. That's fine. Okay. Yeah, so basically what I'm trying to say is, since I don't have the PO, not able to really have the PO3 candle showing up here, I'm just going to draw it out manually. Sweet. All right, let me see if I can get it pulled up on my phone. That's okay. It's not letting me pull it up on my phone. So one thing I was noting is check out the higher time frame. So I'm going to go over to the other screen just to show you this. But this is something I noticed before going into the morning, actually. Check this out. So look at the signature and price here. You have a 4-hour wide-ranged candle. Then you have a sweep of that 4-hour candle high. So this is your second candle in your CRT. Right? And so when this happens, when you see this signature and price, you know with a high probability that the third candle should deliver us to the opposing end of the initial candle's range. So in other words, we knew that this 4-hour candle had a high probability to deliver us lower from here to here. So, and you can see that I marked this out. Like, this isn't hindsight. This is like, I marked out this CRT in the morning. I saw it happen. I said, here, look at this. I said 4-hour CRT, and that this implies that there's a chance that we'll go from the CRT high to the CRT low. So with that in mind, this 4-hour candle goes from 6 o'clock Eastern to 10 o'clock Eastern. So between 6 o'clock Eastern to 10 o'clock Eastern, which is this window of time right here, 6 until 10, we're looking to trade this candle down to go run all this liquidity. So that's how we're using higher time frame CRT to take lower time frame trades. So now the question is, how do we get our entry? Well, I think the easiest way, so if I got you right, you mark out session highs and lows, obvious liquidity, look for SMT, high time frame. Which time frame do you mean? So if I go back to the screen here, you can use any time frame that you want, right? Because all time frames work with all time frames. So in this case, I'm using the 4 hour. And so we sweep out this 4 hour candle's high, and I knew we had we had Asia's lows below, right? We had PM's lows below, we had London's lows below. So I was looking to trade this 6 a.m. to 10 a.m. candle back down to go run these lows. So you can use any time frame. And then the SMTs were nice. They were a nice confluence. So yeah, just I think the main thing to keep it simple is just look at what session highs and lows are around us, right? Because the market's just going to come back to those. Just look at them and then look for SMTs to target them, and then frame the model based off of that. And that's one of the easiest ways to do it without overcomplicating things. Just look for session highs and lows, look for SMTs. That's actually one of the easiest ways. And so turning this off, going back to the other screen. So yeah, I knew this 4 hour candle was probably going to deliver us lower. CRT is something new for me. Yeah, I mean, a lot of people discredit it. A lot of people don't like it, but it's pretty sweet if you actually just do your own due diligence and look into it. So many times you'll sweep that higher time frame candle, and then that third candle or third, fourth, or fifth candle will all deliver to that other side of the candle range. It's just a signature in price, just like an inverse for value gap is a signature in price. A CRT is a signature in price, right? I could pull up the daily chart and show you a million examples, right? We have this wide range daily candle right here. The second candle sweeps the high. You know, with a high probability, the third, fourth, and fifth candles should deliver us to the opposing candle's range, right? Here's another one. This one was better looked at on the 12 hour, where actually this one's better on the 12 hour. You have this wide range candle. The second candle sweeps the high, so you're trading this third candle, this 12 hour candle, back down to the opposing candle's range. So you're trading this third candle. 1, 2, 3. You trade this third one down to the opposing candle's range, right? So then there's another one right here. Well, I don't know if that's the best example. Let's see. I mean, there's a million examples. They're happening constantly. There's an hourly one not too long ago, I think. Yeah, here you go. Right? You have a wide range candle, a sweep of the high. On the second candle, you know with a high probability that the third, fourth, and fifth candles should deliver us to the opposing side of that candle's range. And you can see that's exactly what happens. So it's just useful for bias. Just another tool to add to your toolkit. It's not like anything has to happen because of anything, but it's just a tool, as is anything. So anyway, back to the other screen. I knew that this candle, this 4 hour candle, had a high probability to deliver us lower. So I'm going to take a screenshot of this on the other screen here. So there's CRT high, CRT low. Boom, and then boom. So if I was to take this trade again, or if I was to try and trade this, I would have entered. Okay. Let's put this, let's make a new folder for trades. This is something I'm just now starting today. This is the first day I've ever done this. So I'm going to just start recording all the trades that I see. So trades, and then we'll do new folder, January 29th, 25. Okay. And then screenshotting this. January 20. Where's? Oh yeah, trades. I'll go over some more like realistic trades because I feel like this trade's kind of unrealistic. We wouldn't actually catch this because it's just such a high RR trade. It's not really that realistic for us, at least not for me yet. But 4-hour power 3, and then you can see there's that lower time frame version of it. Okay. All right, let's move on. I don't want to stay on this forever. I want to move on. I gotta screenshot it again. Hang on. It's crazy because like, if you use StatMap with like, I guess like an understanding of like what you're, oh, man, I'm just now realizing like combining CRT and StatMap is actually like insane if you know what you're doing. 4-hour PO3 low time frame entry. What is this? This is a 15-minute CSD and breaker creation. Okay. Let me see if I can get chat pulled up on my phone now, if it'll let me. It's still not loading, so that's fine. Okay, let's move on. So with that 4-hour CRT, I knew we were gonna deliver to the other side of the range. I knew this was probably a sell model. So that's how you could have capitalized on that trade. Maybe there was a lower time frame trade you could have taken. Let's try and look at that first. Possibly you could have taken this inversion, right? Now, yeah, another way to have capitalized on this was this IPG. Right, this also would have been a good way to capitalize on this trade with simply just, yeah, this would have been nice. Probably would have just put stop here. And yeah, once again, this one would have even been better RR, right? Oh, StatMap? Yeah, I'll show you what StatMap is. It's pretty sweet. I actually think this would have been a lot better way to capitalize on this trade here. StatMap is like, if you want to be one of the greatest traders in the world, use StatMap, bro. And I'm like, that's something you'll only find out about on my channel and no one else's channel, because either people don't know about it, or if they know about it, they gatekeep it because it's actually insane. Basically, it tells you, so a brief overview of what it is it gives you the statistical expected manipulation and distribution for any candle. So like, for instance, remember how if I go back to the screen, I knew with a high probability that this 6 a.m. candle right here, I knew with a high probability that it should deliver us to the opposing candle's range. So I knew with a high probability it should deliver us to the CRT low. So I can turn on this indicator. It's called statistical mapping. It costs money, but I pay for it. And it tells you the statistical manipulation and distribution for every candle. So in this case, the statistical 4-hour distribution, typically on a bearish candle, we will go to this green line here. So this is the statistical level. It's just pairing statistics with your trading. So statistically, on average, we will go to this green line here. And so you can see that aligns with all of this low resistance liquidity here. All of the trend line lows. So when I say low resistance liquidity, what I mean by that is just like a trend line of lows. So in this case, we have a really, really nice trend line here. It's just super, it looks, you see how obviously generated this is, how the bodies are all perfectly holding. People that are new to trading are like, oh, support and resistance, it's going to hold when it comes back here. But actually, no, the market aggressively dumps right through all of that. And yeah, when the market comes back to these low resistance lines, yeah, I'm trying to think of the word. It just cuts right through. That's why it's called low resistance. So yeah, same thing here. You could have taken, instead of that 15-minute CISD, you also could have taken this as a 5-minute inversion. Arguably, this would have been even better. Now, realistically, I would have taken this as this kind of a trade. I'm fortunate because was I on the charts at this time? Yeah, there's a lot of useful information. I hope that that's helpful. So if I was actually smart and was paying attention, I would have taken this because we have really, really good trendline liquidity here. This was an awesome trade actually. Sweep out these equal highs. This is something I would actually take, where we get a 5-minute IFG towards good liquidity here. This is something I would actually take. This is the trade of the day, actually. So the question is, was I on the charts at this time? I get on the charts. This is 7 a.m. Eastern. But I got on the charts especially early today. I got on the charts at 4:30. So if I go 1 hour, because I can't take, one of my rules is I don't take a trade for the first hour and 20 minutes just to get enough information to frame a really high probability trade. If I don't, if I rush into it, it's just gonna mean that my trades are lower probability, right? So I actually got on the charts like 4:30 a.m. my time. So I got on the charts here. So 1 hour, 20 minutes from then, unfortunate, I would have missed the trade. So yeah, but this was probably the trade of the day, honestly. I mean, actually, there were probably a few other good trades as well. So we'll add this to the okay, trade 2. We'll save this here, and then we'll have different versions of this trade, right? We'll have the one that's realistic that I would actually take, which is this one, targeting this really, really obvious generated liquidity. So this is what I would realistically take, right? Just something simple that I know is high probability. So I'm going to put that. Where's the trades folder? There it is. Okay, realistic version. And then I'm going to have the one where, like, if I were to leave runners, I could possibly leave a runner to the 2 to 2.5, right? So that's another possibility here. Now, this isn't that unrealistic. I know it's 3.7 to 1, but, like, you could catch this if you just wanted to hold a runner to target that. So I'm saving that one as well. Runner to the 2 to 2.5. And then let's say you left a runner down to essentially our 4-hour CRT low. Real quickly, let's look at that. The 4-hour CRT low was right here. It was right here. So let's say you took a runner down to this. 5 minute. So this would be 5 to 1 down to the CRT low. Okay, saving that. And then if you were to take this to our statistical distribution level on StatMap and the 4 to 4.5 standard deviation, that would be a 7 to 1. That's crazy. No, I would not really ever take that. Maybe I'd leave a runner. Like, when I get really good one day, I could leave a runner to do that, but not good enough at it yet. But I did call the entire model, right? So, I mean, it's definitely possible in the future once I get better. So, runner to the 4 to 4.5 and 4-hour D minus. All right, let's look at the next trade. So, I mean, you also could have taken, this theoretically. Like, let's say you took this one, you could have taken this, but you just would have had to anticipate this gap to be broken, and that's something that's kind of scary. I don't know if I would personally do that, but you could have taken that. So here's that. I'll mark it out just in case maybe someone would want to take it. Okay, so this is the IPG with an external gap here. Okay. And then, yeah, I probably would not have taken that personally. And then I'm curious if this was an inverse fair value gap over here, we closed a little low. But theoretically, this, you could have taken this at like 3 a.m. So this was a nice breaker and fair value gap trade in the middle of the night here. You see this breaker block. And then you see this fair value gap. And this would deliver you to all the way down to go run these lows. Which were low resistance. So much of trading is just sitting and waiting and doing nothing. It's actually crazy. So like my problem is I can't just sit on the chart for this long and wait. So it's interesting because we got, today was a, let's see. Did you take any trades today? I did take a trade, and it was cause I was trying so hard not to, but I was falling asleep, and yeah, I took a trade. I took a trade that I definitely should not have taken. I was falling asleep. But whatever. I'm just trying to move on with it. But yeah, I took a trade. It wasn't good. It was just me. I was just really tired, and I'd been sitting on the charts for so long. So one of my new rules that I'm making after this today is, like, I'm trying to think of what the word is. If I feel like I'm falling asleep, I'm not gonna allow myself to take a trade. It's a new rule. You end up taking longs after FOMC. Yeah. That was good. I think I know what you're talking about. This trade was really beautiful. Good job, bro. If you took this, this is clean. I just want setups like this. This is the kind of trades that I want. Wow. I'd take profit here. These kind of setups are just so pretty. So we'll mark this out that you could have taken this later on in the afternoon. That was beautiful. Okay. And then another trade that you could have taken later on during the 15-15 macro. I will get into more of AM later because that was what I actually traded today. By the time we started consolidating here around 10 a.m., so By the time we hit our target, this 4 to 4.5, in the future, if we ever hit a 4 to 4.5 like this, dude, I gotta just go off the charts because smart money's already out of the market. If we've already completed some kind of model, like at that time, smart money is gonna be out of the market. So there's not really any point in taking that. Okay, back to what I was saying. So you could have taken a trade here where we're delivering from we're delivering from a breaker. So this up close, these series of up close candles here, and we're delivering from a fair value gap. And then on the low time frame, we get, I guess you could take this as a 2-minute one. That would be fine. Or you could take this as like a 30-second one. Now that I'm looking at it, I think the 2-minute one would be best. Just enter on this 2-minute close above. And like that. And then stop loss, I put the stop loss probably like down there. And then I'd probably just target these highs here for 1-to-1. This was nice. And this was during the 15-15 macro as well. So much easier to trade in hindsight, but it is what it is. Trade 6. Now I would like to look for SMTs. If I could get chat to show up on my phone, that would be nice. Yeah, in the future, once we hit a 4 to 4.5 standard deviation like this, I'm not taking anything. Like, cause when the market hits that 4 to 4.5 max extension, that's just gonna start consolidation. Like we hit this 4 to 4.5, it's like, okay, now the market's just gonna start consolidating, and that's exactly what happened. So lesson learned there, especially because we already ran all this liquidity, right? So, oh well. Let's get rid of everything. I will write the trade that I took in my journal, but yeah, I was not. I was falling asleep. I was so out of it. I'm still getting better with live trading. It's so much harder than hindsight, but yeah. was just falling asleep, and so I couldn't think straight, and that's what happens. But I took a loss. I think it was just 1-1. I could go over it, but it was just stupid. Like, it wasn't even. I'm embarrassed to show it, but I'll just show it. It's fine. What happened was I measured out this. Let's see. Yeah. I wanted to see us come to this 4 to 4.5, and you can see that we did end up coming to this 4 to 4.5. So I was right about that. But we already ran all this liquidity. It was lower probability conditions. I was just falling asleep right here, if I'm being completely honest. So don't make fun of me for this, but I really just wanted to try and hit a 1-1, because if I could just hit a 1-1, then I'd pass the rest of my accounts, right? So I really wanted to hit a 1-1. So yeah, don't make fun of me for this, but we closed way too low, right? I tried to take this, like, essentially just thinking, oh, maybe we'll just instantaneously dump all the way down. But I honestly, like, I entered and then I realized, like, oh crap, we closed. Because if we closed like higher, like if we closed here, all of a sudden then this would have probably been like decent, right? Because we're delivering from a fair value gap. But we closed way too low, and my brain couldn't, because it happened within 30 seconds. My brain couldn't register, like, oh crap, we closed way too low. And so I tried taking this, and this was not good. And we were already at the 2 to 2.5, and I thought maybe we were just gonna go straight to that 4 to 4.5. But yeah, definitely a low probability trade, and I only lost half risk on that. But yeah, we were within consolidation as well. I was just tired, so definitely not proud of that, but whatever. Yeah, I was just tired. But you would note, it's important to note that I did call out this entire model, and yeah, this is why you just, like, when the market starts consolidating, you just like, for instance, once we hit all this low resistance liquidity, like all throughout here, like once we run through all this, the market comes all the way down here. In the future, I'm gonna be done. Like, I'm gonna get off the charts. So let me write this down in my journal. So you'll note we hit this 4 to 4.5. If I see this happen in the future, dude, I better close that laptop, because what kind of trade are you expecting to get now? If we already hit the max extension and ran all the liquidity, what kind of trade do you expect? You're chasing. The move already happened, right? You're not going to get another move for at least like a couple hours. If you do get a move, it's going to be low probability. So in the future, if we run all the liquidity and like I miss the move and this happens, I better close the charts, dude. I better just jump off, because any trade I take is going to be a lower probability trade. We already ran all the liquidity. Like, okay, I get that you missed the trade, but that's not an excuse to take another one, right? So I'm going to go back to the other screen. I'm going to write this in my journal. One incredibly So yeah. Very valuable lesson learned from today. With that, let's go over some more trades. There's trades that when you go through the charts and actually look, you can find, right? Because you're only looking at the charts. For me, for instance, I was only looking at the charts from 7 Eastern until like 9:30 Eastern. So I knew that this was the high probability move. That's why I was on the charts in here. But I couldn't get an entry, and so maybe we could find something for an entry here, right? So I would have liked, one trade idea that I was looking for, right, was, once again, I knew we were within a sell model to target this really obvious generated liquidity. I mean, clearly the market was being drawn here. And it became especially clear once we started accelerating lower. And we had SMT here, right? So we have SMT. We had a 4-hour CRT, which I showed you earlier. So with all that in mind, I knew we were drawing to the end of this generated liquidity here. Especially because when you measure out standard deviations of this, I guess I should measure it out like that. You get the 4 to 4.5 right here. So this area down here, this was where I knew we were drawing to. This was the market's objective. So I was looking for lower time frame entries within here, but I did not see anything. So let's go back in the charts and see if maybe I missed something, right? Because there could have been something. The first thing I'm noting is we pushed back up into this 5-minute fair value gap. At the time, I was being careful because we ended up getting a bullish SMT, and so there was a chance that we could have came all the way back up. And so I was taking that into consideration. But then after we get this aggressive wick into the fair value gap and close lower, at that point I should have flipped my bias down and been prepared to actually go run that liquidity, because that was my bias all along, right? That's what I wanted to see happen. So SMT, really good generated liquidity, 4 to 4.5 standard deviation. And here I should have been looking I should have been looking a little better for my trade. It was hard to find a trade in here, but we're going to see where I went wrong and where I could have possibly found a trade, right? One possibility is I'm seeing up here, we definitely had some kind of inverse fair value gap. I'm wondering, maybe was there a 30-second one? We end up getting a 30-second, but it closes like super low, right? So maybe you could take it if you wanted to with conviction, because we're delivering from that fair value gap, but you'd have to be really paying attention and actually catch this right when this inverses. And I think this would be a personal preference trade, because typically you don't like to have inversions that close so low. Typically you like to have it close somewhere right here or right here, right? Because otherwise, if it closes low, then you just have to have your stop loss higher. But in this case, it's fine because our drawn liquidity is all the way down here. So we still got good RR on this. So, but we did close super low. So in general, that's probably not the entry I would have gone for. So let's try and figure out where could we have entered to get in on this move lower to go run this liquidity, because we knew that this is where the market wanted to go. I mean, clearly this was super generated, super obvious. Clearly we were in a sell model. So how could we have gotten in on this move? Let's look and find some more details here. I think one thing to know is maybe you don't get in on this inversion, but instead you get in. Oh, this is what you would do. This is possibly what you could do. Now, it's kind of scary because you have an external gap here, right? And so this is also a personal preference style of trade where maybe you're comfortable with taking this, maybe you're not, but maybe you enter on the close below this breaker block. And honestly, with this good sweep of a high, this honestly might have been fine. Let's go. So yeah, one possibility is you could literally just enter on the close below this breaker, and um, the scary part is you have this external gap, but with conviction in the draw and liquidity, this possibly could be a way that you could have entered this trade. So I'm going to screenshot this. I'm not necessarily saying that I would have taken this because it would have been tricky to know if we were going to break this external gap, but we had good signature to it, right? We had a good pop above the high and then close below. So, and we're going into market open. So I probably would take that actually. Yeah, in the future, if I see this, I'll probably take it because we just have good signature to it, and it's right at market open. Actually, it was right before market open. So there's that 4 to 4.5. So both of these overlap with each other. And yeah, let's put this in our little trade journal that we got going on. Yeah, I think this is one of those situations where you really can anticipate that gap to be broken because of liquidity. So okay. Nice. Another possibility is like I wanted to see this 2 minute become a breaker. That was my main issue, and you can see that we really didn't get a 2 minute breaker formation. And so that was really frustrating for me because I wanted to enter on this 2 minute breaker. I should have been looking at all time frames because you can see we already got a 3 minute one. And that's all the market needed to go. Like I wanted to see this 5 minute one become a breaker, right? Same thing. I wanted to see this 5 minute become a breaker, but we didn't get it on the 5 minute. We didn't get it on the 2 minute. The one time frame I didn't check was the 3 minute, and that's the one that we ended up getting this close below the breaker on. So just pay attention. Like if I just paid attention and saw that we closed below on the 1 minute or 3 minute, then it probably would have entered. Same thing here. Like maybe you enter on this 1 minute inversion. Now it's scary because we haven't on the higher time, we have a higher time frame gap, right? But maybe you're okay with entering there, right? So this is just personal preference kind of thing. So like it's not like you can't enter on lower time frame inversions when there's a higher time frame gap, because you definitely can. But you just have to understand the context and the liquidity. That's what I'll say. So in this case, we had good liquidity, and it made sense, right? Okay. a low time frame inversion. Low time frame inversion could take this with conviction. So, I'm not sure what else you could have taken. Like maybe we inverse this 1 minute and you're like, oh, I wanted a long here, but I don't know. I'm not a big fan of trying to long through these giant fair value gaps. I would instead look for a move back lower. Yeah. I think we covered most of all the possible trades for the most part. Very valuable journaling day. I think I'm going to call it here. There's a lot of valuable lessons, a lot of good trades you could have taken in PM as well. So I think I will call it. But yeah. I will see you guys